Welcome, and let's dive right in. We're looking at something that's really changing the game for huge industries. Artificial intelligence and how it impacts customer retention, specifically today in insurance.
Yeah, and our mission, it's pretty clear. We've looked at sources showing AI moving way beyond, simple automation. It's delivering really personalized, proactive support, turning data into loyalty, basically.
Absolutely. And this is a deep dive. So we're not just talking about the idea of chatbots. We want to get into the specific tools, the predictive models, the sentiment analysis engines, that sort of thing.
Exactly. It's about leveraging advanced analytics on everything claims history, payment patterns, even how you interact with them to
Yeah.
build these stronger data-driven relationships. We're after the specific tools and, crucially, the quantified results.
Okay, so let's unpack that. How is AI actually being put to work right now? Where does it start?
Okay, so foundationally, it really has to start with prediction. How's the tech currently being used to spot who the industry calls the at-risk client?
Right. It must begin with pulling data together. What kind of inputs are these AI models actually chewing on in the insurance world? It can't just be like when your last payment was made.
Oh, no, it goes much deeper. The AI analyzes really comprehensive customer data, but yeah, it definitely puts more weight on certain things. Your detailed claims history, for one.
Okay, claims history makes sense.
Yeah, and also subtle shifts in, say, how often you pay or the method you use. And this is critical, the entire history of your interactions, every call, every chat.
The whole interaction record. Wow.
Absolutely. And the analysis isn't just looking for, will this person renew? It's identifying risk in different ways.
Different categories of risk. What do you mean? Like at risk could mean they won't pay, or maybe they're looking at competitors?
Exactly that. We're seeing systems now that flag clients not just for likelihood of non-renewal, but also things like the probability of future late payments,
Okay.
or even just a sudden drop in how much they interact online, like through the app or website.
Right.
That could signal they're shopping around.
Ah, so multiple warning signs.
Hmm.
And these different flags, they let the insurer step in differently depending on the problem.
Precisely. It allows for these really tailored, preemptive interventions, very targeted.
That makes a lot of sense for stopping problems before they start. But what about, the immediate interactions? Like when I call or use the chat, how do they know if I'm actually happy or if I'm secretly frustrated and maybe thinking about leaving long before I, actually decide to cancel?
Right. That's where some more advanced tools really come into play, specifically real-time analysis during those digital interactions.
Okay.
So you start with the basics, the 24/7 support from chatbots using natural language processing, NLP. That gives you immediate response.
The chatbots, yeah. We see those everywhere.
But the real retention power comes from layering sentiment analysis on top of that.
Sentiment analysis, how advanced is that really? Is it just scanning for like angry words, complaint, cancel, that kind of thing?
It's way beyond simple keywords now. The really effective systems, they gauge your satisfaction in real time by reading digital cues.
Digital cues. Like what?
Things like the tone inferred from your word choice, maybe the pace you're typing at, if you suddenly start using lots of capital letters.
Ah, the digital equivalent of shouting.
Kind of, yeah.
No.
Or even just repeating the same question over and over again in different chats or calls. These sorts of things get flagged instantly as high-risk interactions.
Okay.
And that ensures a human agent can step in before you feel ignored or get so frustrated you actually leave.
Got it. So it's like an early warning system, turns a basic support chat into maybe a chance to fix the relationship before it breaks.
Exactly.
But wait, if it's so good at stopping people leaving, what about the other side? Does it help make money? Improve the sales process? What do the numbers say there?
Oh, absolutely. The AI works on both sides. It uses these sophisticated predictive models not just to stop churn, but also to drive personalized policy upgrades.
Personalized upgrades.
Yeah, and this is a really key retention lever because the AI might detect changes. Maybe you just renovated your house or bought a newer car based on external data perhaps, and it preemptively suggests the right coverage streak.
Ah, so instead of me having to remember to call them and update my policy, which is a hassle,
Right.
they proactively offer something that actually fits my new situation. It feels like they're looking out for me.
Precisely. It turns a potential chore into a moment where they provide value. And that kind of feeling is a massive driver for long-term loyalty.
Okay, so we've kind of established the how. Now let's talk payoff, the results.
Yep.
Is this investment in AI toolkits actually delivering measurable gains? Things that aren't just, theory.
Definitely. The gains are real and measurable. Let's look at some key benefits, starting with maybe the biggest one operationally. Personalization.
Right, the personalized upgrades you mentioned. I'm really interested in the ROI here. How much does that actually move the needle on renewal rates?
Well, because those recommendations are tailored and crucially timely, the impact is pretty dramatic. One study we looked at indicated this kind of AI-driven personalization boosts renewal rates by a substantial 15 to 20%.
15 to 20%, just from personalized offers.
That's what the data suggests. And think about it, in a competitive market, that's not just a small edge, that's a significant advantage.
Wow, yeah, 15, 20% is huge.
But hang on, is there a risk here? Are they just focusing on retention by selling more? Does that maybe skew the underwriting or lead them to keep customers they perhaps shouldn't from a risk perspective?
That's a really sharp question. But the gains aren't solely from upselling. The proactive service we talked about earlier, that's key for cost efficiency too.
How so?
By using AI to catch issues early, a potential complaint, assign someone's unhappy, and addressing it before it escalates into something expensive like a formal complaint process, or worse, losing the customer.
Right.
It directly cuts the operational costs tied to managing churn and handling complaints, so it saves money and keeps customers. Okay, that makes sense. It's not just revenue, it's also cost avoidance. And efficiency must also mean speed, right? Everyone expects instant service now. How much faster are we talking with automation?
Speed is definitely a core benefit.
Yeah.
Speed is king for customer experience. We saw pretty reliable data showing automation drastically increases operational speed. Things like automated responses were cutting service response times by 50%.
50%, half the wait time.
Exactly. Imagine that from your perspective as a customer.
Hmm.
Half the wait, help available 24/7, and hopefully better targeted answers because
Yeah.
the AI routes it correctly. It fundamentally changes the service experience.
Yeah, a 50% cut in waiting would definitely change how you feel about an interaction.
And just to tie this back to loyalty, these deep AI insights, they're also crucial for highly targeted loyalty rewards.
Moving beyond the generic, here's a 5% discount for everyone.
Precisely. This tech lets insurers reward specific things based on actual behavioral data for that policyholder, rewarding things they want to encourage, like maybe safe driving data from a telematics device, or consistently paying on time. It fosters commitment based on real actions, not just tenure.
So, okay, let's pull this together. We've got a 15, 20% lift in renewals from personalization, 50% faster service. What does this all mean for the insurance industry as a whole? Is this just a few innovative companies, or is it really shifting market strategy?
Oh, it's definitely reshaping the entire competitive landscape now. The sources we looked at point to a major trend. It feels like adoption is becoming less of an advantage and more of a necessity.
And necessity, really.
Yeah, a major 2025 industry report we saw indicated that insurers who were early adopters of this AI tech, they've already seen a significant, get this 25% increase in overall customer retention compared to competitors lagging behind.
Wow. A full 25% higher retention rate. That's huge. Is this happening across all types of insurance, or are certain markets driving this shift more?
It seems to be hitting hardest, or maybe having the biggest impact, in the most competitive spaces. Think homeowners and auto insurance.
The really commoditized markets.
Exactly, where the actual product is pretty similar from one company to the next. In those areas, the main way to stand out is the quality and speed of your service. And that's precisely what AI is delivering for these early adopters.
That's fascinating. So the most standardized products are being differentiated by the most personalized service powered by AI.
It's a bit counterintuitive, but yeah. And looking ahead, connecting this to the bigger picture, the future seems to promise even deeper personalization.
Deeper how?
We're watching AI continue to integrate with even more advanced tools. Things like voice recognition technology, analyzing not just what you say on a claims call, but how you say it, picking up stress or uncertainty in your voice.
Whoa, okay, that's getting sophisticated.
And even more complex behavioral analytics, systems that learn your habits, your preferences, maybe even predict needs you haven't even thought of yet.
So the end goal here seems to be a future where keeping you as a customer is all about service that feels totally seamless, maybe even empathetic, using technology to make the relationship feel almost more human, paradoxically. Perfectly timed, customized.
Yeah, moving beyond just managing a policy transaction to proactively managing risk and value for the customer, that seems to be the direction. Hashtag tag tag outro.
Okay, so let's recap. We've covered how AI takes all this customer data, claims, payments, how you interact, and turns it into these really specific, tailored interventions.
And it's not just theoretical. It's leading to 15 to 20% higher renewal rates,
Hmm.
plus that massive 50% faster service response time we talked about.
Right. And the bottom line impact, a 25% higher overall customer retention rate already being seen by the companies who got in early with this tech.
Yeah, and I think the core takeaway here really is that this technology isn't just being used to cut costs, although it does that.
Hmm.
It's fundamentally about understanding customer intent and meeting needs before they even become serious problems.
It reframes retention. Less about stopping leaving, more about active relationship building.
Exactly. It's using data to anticipate and manage customer value, making sure you get the right message or the right offer at just the right moment.
Okay, so here's something to think about as we wrap up. Given that these early adopters already have that huge 25% retention advantage, what kind of penalty, just in terms of market share, are the laggards facing? Say, in the next year, year and a half, if they don't manage to implement predictive models that can give them even that 15% renewal boost, it really makes you wonder how quickly the competitive landscape is going to continue evolving.